Bear rule number 4. The best bargains show up after the bear has mauled everyone, so prepare for a field day. If I think back at some of the best bargain stock prices I've ever purchased, it seems like most of them occurred during bear markets. When I think back in 2008 during the great financial crisis, the tech stocks that were bought during that time were so cheap that the next decade, a lot of them were up 10, 15 times your money. You don't get that kind of opportunity under normal circumstances. You only get that kind of opportunity, I shouldn't say only, but the majority of the time you get those opportunities when the market's been beat up. If you remember during COVID, I think it was for a week or two, the price of oil actually was so low, and I think for a few days it actually went negative because there was supply coming in that they had no place to store it. They were literally giving it away. And anybody that bought during that terrible bear market of commodities and oil made a fortune. So during those downdrafts are usually when some of the best returns are made. I remember another time when it was again during the COVID crash when a client happened to call in on almost the bottom and was looking at some of the steel and aluminum stocks, bought a few, and 2 years later, one of them was up 12 times that client's money in 2 years. Now, you got to be very careful. That doesn't happen often, but I just talk about that to demonstrate some of the real bargains that show up during a bear market. However, you should look at rule number 5 before you start buying willy-nilly.